I'm so pleased to introduce Miss Riya Arora. She will be presenting in this advanced entrepreneurship class. First, she will share her experience at the college. She graduated from Babson College. She did her Bachelor of Science in finance and in business strategy. So it is very respectful college. So with that, and so Ria will be sharing with us her experience at Babson College. So Ria, welcome. And once again, thank you so much for taking time to talk to the students of Jharkhand University and sharing your knowledge with them. I invite Riya Arora.
The first semester was what is our product and how are we going to sell it and who. And the second semester, the second half of the course was actually getting to sell it. And we talked to our family and we talked to our friends and we talked to strangers and they said, "Hey, do you want to buy our product?" And we had to sell it to them. So all of it was just experiential learning. So we get to do the projects.
What you just went through, you went through the problem identification. So first quarter you did the problem identification. You went and you talked to the customers, right? You did the customer discovery. And then you went to the customer acquisition. And after that, in the second quarter, you started going out for the real marketing and talking to other people, right? That's what you did when you were a student. What did you do? How did you do that? Can you share that with all the students?
Yeah. I also saw one comment come in most schools, in a lot of the schools, even my friends at their college, they have the same thing. They just learn the theory, they sit in the classroom and they take notes and things like that. But Babson is specifically at that school and a few other schools here and there, they do this experiential learning. So this project's based. So for his question, when in the first half of this class, when we were making our business and we were doing lots of market research, and first we thought of the idea of what our company is going to be, what are we going to sell? And so for that, whatever product it was, we have to think about who is going to buy it. Who in the world is most likely going to buy this product? So, for example, one team in my class, in our team, we were doing sunglasses. So, some shades with the lenses were different colors. And so we were thinking, who is going to buy this? Who could we market it to? And so it would be students or people around who are similar to our age. Maybe we could sell it to more college students on our campus. That would be easy. So we don't have to go elsewhere to find other customers. This was simple because our target audience, our target demographic, was already in our college, on our campus. So we got to do lots of interviews. The second step was talking to them of who in our audience and our target market. We asked them, what do you like? What do you want to see? Or if this is our product, do we explain it to them and we ask for feedback and we say, do you like this idea? What would you change about it? We even would ask them, how much would you be willing to pay for a product like this? And so we got all of this information gathering from our target audience. And in business, I'm sure Professor has said many times that the number one in a business is your customer. And you always have to think about what do they want to see? What is going to make them actually buy your product? And so, who's the best person to ask than the actual customer? So, we would go around and we would have these either focus group or these interviews, and we would go and talk to these students and ask them, okay, so here's our idea. What do you think of it? And we had specific questions that we had a whole list of questions, and we asked the same questions to each person or each group that we spoke to, and then we implement it into our product. And we have, I don't know if this class has gone into the design thinking, this ideate and the prototyping stage and all of that. So we would do that. We would go to our supplier and we would get some of these sunglasses and we would have the prototypes. So then we would actually take the prototype sunglasses to our classmates at the college and we would ask them, this is our first version. What do you think of this? What would you change? And they would give us feedback. And then before we got the big order of shipment from the supplier, from the manufacturer, we got that feedback first. So before we spent so much money on buying all of our inventory, before buying, it could have been 200 sunglasses. What if we bought it and the customer didn't like it? Then we just spent all of this money, we have all of this inventory, and it would just go to waste. So, what you can do first is get a small batch, just a few of them, and then you take it to your customer and you ask for the feedback. And then, after you have that, after you actually hear what do they want from their product, then you can go do the big order. Does that answer your question?
Ria, yeah, that was very good. And I see two questions there, and actually three questions. So, uh, which are, I think, very appropriate questions that in our education system, we only learn theory, right? That's one, and I will address that question. Okay, and then of course that first question was Sharma. Anand Sharma, your question is very good, and I will explain that, and then again. But the question is right. So let me address the first. See, students, in first of all, we have to understand the fundamentals. Okay, and I think that you understand that you have to do. And then, when you are asked to make a team, did you become a part of the team? Ask yourself. That is an experiment. That is the work which you have to do. That is the hands-on work. And once you have formed the team, have you gone out, found out what अपने अपने एरिया में, अपने गांव में, अपने शहर में किस चीज की कमी है और उस कमी को कैसे पूरा कर सकते हो, और क्या उस कमी को पूरा करने में लोकल आपके रिसोर्सेज हैं कि नहीं है. सो दोज आर द थिंग्स यू हैव टू फाइंड आउट. तो प्रैक्टिकल जो लोकल प्रॉब्लम है वो आपको देखनी जरूरी है. बहुत अच्छा लिखा है कि हाउ वी आर सपोज टू सर्वाइव इन दिस एडवांस टेक्नोलॉजीज. You know, the advanced technologies are there, but you don't need to go to the advanced technology. You need to just, right now, if you are talking about the AI, those things are available to you as much as it is available to anybody in this world. So you have the same information. How do you use that information? उस इंफॉर्मेशन को कैसे आप यूज करते हैं ताकि आपके जो लोकल जो वहां की प्रॉब्लम है वो वो कम हो जाए। तो ये जो ये आपका कहना है कि प्रैक्टिकल नहीं है, तो ये इसमें यू हैव टू पार्टिसिपेट, यू हैव टू कम एंड टेक एक्शन। अब जब बात करते हैं, सवाल पूछते हैं, यू हैव टू यू हैव टू कम एंड आस्क द क्वेश्चन, or you have to answer. Curiosity, right? Curiosity and creativity and critical thinking, ये तीनों चीजें आप लोगों को बहुत जरूरी है। तो उसके लिए आपको ना टेक्नोलॉजी की जरूरत है, ना आपको किसी और की जरूरत है, अपने माइंड सेट की जरूरत है। जो ये जान लो कि अभी जो नॉलेज इकोनॉमी है, जो रटने वाली चीजें ना, वो सब पुरानी हो चुकी हैं। As long as you understand the concept, but memorization, that is all the old things, because everything is available on the palm of your fingers with this smartphone, right? So तो आप ये सवाल मत देखिए, आप अब सोचिए कि मेरे पास जो यहाँ पर जो मेरे पास रिसोर्सेज है, वो मैं कैसे इस्तेमाल कर सकता हूँ, वो रिसोर्सेज कैसे मैं कर सकता हूँ, ताकि अपने घर में मेरे जो प्रॉब्लम है उसको सॉल्व कर सकता हूँ, मेरे माता पिता को प्रॉब्लम है उनको काम आसान कर सकता हूँ, मेरे कॉलेज में प्रोफेसर है उनको उनको हेल्प कर सकता हूँ, मेरे कॉलेज में कितनी चीजें जो मेरे को पसंद नहीं है उसको मैं कैसे ठीक कर सकता हूँ या कर सकती हूँ। दैट्स व्हाट यू हैव टू डू। ओके, सो इट इज अप टू अस, इट इज अप टू अस व्हाट वी डू, हाउ वी डू इट। ओके,
I think I'd like to add one more thing.
श्योर।
क्योंकि जब भी हम लोग डिस्कस करते हैं, my goal is to tell you where this thing is really used in the industry. अगर आप क्लास अटेंड करते हैं, हम लोग उसको कहाँ यूज होती है, I always translate that into the actual working of an
Yes.
industry. तो अगर आप बोल रहे हैं कि आपने ये सब नहीं किया है, I would say attend this class.
Okay. Can Professor Roy and everybody, can you see my screen?
Yes, we can.
Good. Okay. Thank you. So this is the advanced entrepreneurship class, and the object here is to make sure that we really do the things with our hands. That means you will get to go to the customer. You'll get to, we have been looking for, remember from the day one, we have been asking for कि what is the unmet need. हम लोग को ढूंढनी पड़ेगी वो अनमेट नीड, और लोकल नीड हमको ढूंढनी पड़ेगी। अब कितना बढ़िया कि वो वन ग्रुप फाउंड आउट कि भाई जो झारखंड का जो जो आदिवासी का जो खाना है, जो टेस्टी फूड है, दैट इज नॉट वेरी वेल डिस्ट्रीब्यूटेड और ऑर्गेनाइज, ताकि उन लोग, ताकि सब उसके बारे में जाने, एंड दे आर that was the unmet need they found out. Excellent. Somebody also said that the transportation during the for the short distance is very difficult, they don't get it. That is also very good. Some then again another team kind of found out कि farmers, they talked to a lot of farmers, and कि भाई, that is Himanshu and his team, they found out, and they are coming up with the solution ताकि use of the several sensors, the sensor which can test the various things and give the farmers update information, what do they need to do. सो चारों तरफ आप लोग जो ये सवाल जो पूछा है, ये एक्चुअली ये सिर्फ उनका सवाल नहीं है जिस स्टूडेंट ने पूछा है, ये सवाल हर किसी के लिए, हर किसी का है मेरे ख्याल। लेकिन आप लोगों को इसके आगे बढ़ना होगा कि ओके, सवाल तो है लेकिन मैं हूं, आप है ना। सो आप इस सवाल को सॉल्व कैसे करेंगे, with that's the mindset you have to have, and you will do everything and do with the local things. So coming back here, so advanced entrepreneurship, we are going to talk about entrepreneurship financial, creating financial model, कि कैसे उसको फाइनेंशियल मॉडल बनाएंगे. We talked about in our last class in quite detail, and this is an extension of it, practical. And our speaker, Miss Riya Arora from Babson College, what she has done is she created a model, the financial model, जो कि और आपके पास आप सबके पास है वो अब, और आप उस मॉडल को आप अपना सकते हैं। आप अपना नाम लिखिए, आप अपने कॉलेज का नाम लिखिए, और उस मॉडल में जो है उसमें उसको अपने जो भी प्रोजेक्ट आप करेंगे उसमें यूज करें। तो सो वन थिंग, आप ऑल ऑफ यू हु आर इन द क्लास, हाथ उठा के बोलिए कि वी हैव टू गेट फेमिलियर विद द एआई टूल्स। तो चैट जीपीटी, क्लाउड, Gemini, you have to get familiar with that, and there are many more. मैं तो ये 3 लिखे हैं because initially these are free for you. You can use that. आप इस और कोई भी सवाल आप उनसे पूछिए, वो आप उनसे पूछिए कि मेरे लिए बिजनेस मॉडल बना दो, they will make business model for you. आप उनसे पूछिए कि ये make me the practical, how do I go and look for a customer? It will tell you what to do. लेकिन आपको, so you have to ask that question. लेकिन वो सवाल आप किस तरह पूछते हैं, जैसा आप सवाल पूछेगा वैसा वो जवाब मिलेगा, right? This is so what you want to do is अपने prompt में लिखिए कि मेरा नाम रिया है, मैं थर्ड ईयर इंजीनियरिंग में ऑफ अपने कॉलेज का नाम लिखिए, मैं ये एडवांस एंटरप्रेन्योरशिप क्लास ले रही हूँ, एंड शो मी हाउ टू वट एवर क्वेश्चन यू हैव, आस्क दैट क्वेश्चन। तो पहले आप चैट जीपीटी में जाइए, उसे सवाल पूछिए, एंड वट एवर इट गिव्स यू कैन कीप ऑन आस्किंग द क्वेश्चन। अच्छा ये कैसे करेंगे, ये अब इसको आगे कैसे बढ़ेंगे और ज्यादा कैसे जानेंगे, कीप ऑन आस्किंग दैट क्वेश्चन, कीप ऑन आस्किंग दैट क्वेश्चन। ओके, दैट्स, और फिर उसके बाद पहले चैट जीपीटी में कीजिए, देन यू गो टू द क्लाउड में भी उसमें सेम थिंग, यू आस्क दैट क्वेश्चन एंड सी व्हाट काइंड ऑफ आंसर इट गिव्स, क्या जवाब देता है, राइट? एंड देन गो टू जेमिनाई जो कि गूगल का है, उससे पूछिए। So you will learn a lot. This is an exercise for you to, आज जब जाएं घर जाएं तो प्लीज टेक दिस एंड डू दिस एक्सरसाइज, कि तीनों जो हैं तीनों में जाके एक सवाल पूछिए, एंड देन our question could be, how can I become an entrepreneur? You can use that question actually. Or how can I become an intrapreneur? All of those things you can ask. Okay. So today our guest speaker is, of course, I already introduced Ms. Riya Arora from Babson College. And agenda, we are going to go and financial model which she actually made for this class, and then she will encourage you कि आपके पास वो मॉडल है, अब आप अपना मॉडल उससे बनाइए, क्योंकि जो खर्चे हैं, कितना पैसा आया, कितना पैसा गया, कितना मटेरियल में खर्च हुआ, कितना लेबर में खर्च हुआ, कितना मार्केटिंग में खर्च हुआ, कितनी इनकम हुई, कितना लाभ हुआ, कितना नुकसान हुआ, ये सब जो टर्म्स हैं, ये डजंट मैटर व्हाट बिजनेस इट इज, ये हर चीज में वही यूज होगी। तो और वो आप अपने आप प्रैक्टिकल की आप बात पूछ रहे थे ना, कैसे हम करेंगे, तो अब जाके उस मॉडल में आप अपने आप जाके जो भी आपका विचार है उसमें, जो भी आपका जो आइडिया है, जो भी अनमेट नीड है, उसमें जाके उसमें भरना शुरू कीजिए, and then you will create your own, and then we'll have a question answer also. So at this time I will hand over to our speaker today, who will go through the financial data, so financial model. So Riya, it's all yours. Thank you so much, and thank you for this evening, agreeing to come. I know you are very busy. I know you've got a lot of things to do because you are so busy. You are such a wanted person at your college, at your school. So with that, and we from the Jharkhand University, and all the students who are in the class, they all said that they wanted to actually talk to you. And that is so. Thank you so much for taking it. So it is all yours. I'm going to stop sharing. Okay, and so Riya, you can go ahead and.
Okay, well, thank you for the very warm welcome. I will share my screen. This is just a little introduction about me. I just graduated from college, from undergraduate, exactly 1 week ago, last Saturday. And now I'm back here in California. At Babson College, everybody learns business there. It's the whole thing is just a business school. So we all graduate with a bachelor's of science in business administration. So instead of we have um, a major and we have one focus, we're all doing business, so we have like a minor, we have a concentration. So I did two concentrations. One of them was in finance, and one of them was in strategy and consulting. And so even before college and while I was in college, I've had experiences working with startups and um, even having my own startup, creating my own nonprofit as well, and getting to work through internships and different jobs during my college. Um, so if you have any questions about my experience, you can please ask. Um, I already mentioned a little bit earlier that at my college, it was all experiential. So we got to do very hands-on projects. So next on our slides, I know you had a speaker before with some slides, and this was very helpful. So I'll just run it through quickly before going into the model that I created. But remember, there are th three of the financial statements, and they all work together. They're all like the team. So the first one is the income statement. This is what it'll look like on this right side. Um, it's how much money the you're making from selling your product or your service. You calculate it, you take, how much of the product that you're selling, times like how much of it that you sold, and then you have to subtract some things. So if you sell 100 sunglasses for $10 each, or some amount, you're not going to have $1,000 at the end of the day. That would be your um your revenue, but that would have more things you have to subtract under, because you have to do things like, you have to pay your employees, or you have to actually buy the sunglasses or buy whatever product it is that you're selling. So instead of, I sell this, I make this much money, I make $1,000 from selling this product, instead of getting to keep all of it, you have to give some of it away. So you're left here at the bottom. I don't know if you can see my mouse. You're left with your net income at the bottom at the very end. Do you see how this one up here, your net sales, this is your same thing as your revenue. In finance and in business, it gets a little confusing. They have a lot of different words that mean the same thing. And sometimes they have the same word, but it means different things. So here we're talking, it says net sales here, where my mouse is. That's just, we're gonna call that our revenue. So we can see this number up here is almost $4,000. But we have to do all of these things. We have to subtract it. We have to pay for our product, our inventory. We have to pay for, the building that we use to, like the office building. You have to pay for that. You have to pay like rent and things like that. So at the end, this goes, almost $4,000, and it's barely anything at the end. It's only 165 at the end. Or this is in thousands, so there's a difference between just all the things that you can sell versus what you get to keep and put in your pocket at the end of the day. Then the next one is the balance sheet. This one is as if you are taking a picture in time, one snapshot in time of what do the financials of your company look like at one point in time. It's not a big overview over time, it's just at one moment. So say you're doing it in the beginning of the year, or you can do it in the middle of the year. Say you can do it in March or something like that. And you always have to put the date at the top of your statement so it's very clear when is this happening. Because you could have, say for example, this line item here, cash, you could have 20,000 in cash, but that might be in February. And if you go down to June, it could be a very different number. So this is where this one equation that I think we were given last class session of ALLO, assets equals, this one, assets equals the liabilities plus the shareholder equity. So basically, on this side, this asset side, this is what you own. This is something that you have in your possession, in your company's possession. Your assets are what you have already. Then the liabilities and the equity, those are things that you owe to someone else. Let me know if this is clear already. I know this might be review, or if this is helpful, if I need to go a little slower, a little faster. This is okay. Yeah. So yeah, then the next one is the cash flow statement. And this is where they all work together. You take the cash from your balance sheet, like at the top, and then it's broken down into 3 different sections of cash flow. Cash flow is the money coming in and out. It's exactly what it sounds like. It's the flowing of cash, whether that's coming in or coming out. So cash flow statement, the 3 different parts, one of it is the operating activities at the top, and another one is the investing activities, and the other is the financing activities. And we can go into what each of those are in our model, but it kind of says that over here. The operating activities is just what the business needs in order to stay functioning, in order to do, its operations. From investing activities, this could be something like you invest in a piece of equipment. I'm going to buy this machine because over the next 5 years, it's going to help me build all this product that I'm going to sell. So that's, you're investing some money into a piece of equipment that's going to give you gains over the long term. And then the financing activities is there are 2 ways that you can finance a company. I don't know if this has been covered, but there are only 2 ways that it can happen. One is through debt, and one is through equity. So debt is something that, like a loan, like you are borrowing money, and you owe them at a later period in time, at a later time. So right now you're borrowing from someone, and that's how you get the money. And the other one is equity, which is ownership of the company. And so you can say someone can buy, when you have heard of these shares of a company or a stock in a company, that's what this is referring to, is they own a piece of the company, of the business, so that they get that percentage of returns. And so those are the two ways that the financing can happen, right? And so this slide I also thought was very helpful, is to see the big pictures, that you have these three statements, but they don't just stand alone on themselves. There's actually so much that's connected. You can have, you know, your balance sheet. There'll be a line item that says cash. But in our statement of cash flows, that's also going to be there. Same thing for if we have our net income. So in our income statement, at the very bottom, we're calculating for net income. And we see that all the way on our statement of cash flows is and it actually says right here, from the income statement. So that was the last of these slides. I just used those to explain. Are there any?
There are two questions which came up. Okay, and let me ask. The question is that what if I will get all answers from AI, and then what are you all, or what is your role to teach us? Very good question. हम लोग का रोल ये है कि हम आपको वो ऐसा रास्ता दिखा दें. You become independent. You can get the data, get the information, get the knowledge wherever you want to get it from. That's what the role is. कि मेरा जो ज्ञान है वो सब ज्ञान आप लोग सबको मिल जाए. प्रोफेसर सुरेश का जितना ज्ञान है वो सब ज्ञान आपको मिल जाए. रिया का जितना ज्ञान है वो सब आपको मिल जाए. That's what the purpose is. Okay, so you have to kind of start looking at it. कि किस तरह, एक I like to just quote कि गीता में एक जगह है कि it doesn't matter गीता और any other language, any other religion, कि लेकिन गीता में रेफरेंस बताता हूँ कि वो क्या हुआ कि कृष्ण भगवान बोले कि भाई अर्जुन, मैंने तुमको सिखाया अब तक कितना. तो अर्जुन ने कहा कि भगवान जी मेरे को सब पता चल गया, अब आई कैन गो एंड डू माई स्टफ नाउ. जो भी आपने ज्ञान दिया मैंने ले लिया और मैं वो अपना काम कर दूंगा. तब भगवान कृष्ण बोलते हैं कि अच्छा देख अर्जुन, मैं तुमको अब बताता हूं कि तुमको क्या नहीं आता है. और तब वो अपना विराट रूप दिखाते हैं. वो ये कहने की कोशिश करें कि ज्ञान इतना ज्यादा है, इतना वृहद है कि you 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 have to keep on learning. अनेक बाहुदर वक्रानेत्रम पश्यामि त्वम अनंत रूपम न मध्यम न अंतम न पुनस्तवादि पश्यामि विश्वेश्वर विश्वरूपा. इतना बड़ा है ज्ञान कि ना उसका बिगिनिंग है, ना उस ज्ञान का मिडल है, ना उस ज्ञान का अंत है. So that's what that AI is actually taking us there. So it is up to you, students. How do you do it? What do you do it? Okay. Then another question is that so role, हम लोग का रोल क्या है कि आपको सिर्फ ये गाइड करना कि मैं कहाँ से इंफॉर्मेशन लूंगा और कैसे सवाल पूछूंगा, AI से क्या सवाल पूछूंगा ताकि ठीक जवाब मेरे को मिल जाए. Okay, then the second question, what is the non-current asset? तो एसेट दो किस्म के होते हैं, एक तो करंट एसेट और दूसरा है नॉन करंट एसेट. जो भी एसेट को आप करेंसी में कन्वर्ट कर सकते हैं विद इन 1 ईयर, एक साल के अंदर अगर आप उसको करेंसी में कर सकते हैं कन्वर्ट, उसको बेच के कैश में कन्वर्ट कर सकते हैं, तो दैट इज द करेंट एसेट। और जो भी एसेट 1 साल से ज्यादा में समय लगेगा उसको कैश करवाने में, वो बोलते हैं नॉन करेंट एसेट। कि दैट्स व्हाट द डिफरेंस इज। क्योंकि तब करंट एसेट का मतलब ये हुआ कि आपको अभी पैसे की जरूरत है, तो यू कैन गो टू द बैंक एंड दे विल सी द करंट एसेट, दे से ओके वी विल गिव यू द लोन टू डू योर बिजनेस। ओके, दैट्स ओके। नाउ any other question, Riya?
One thing that I also found with this question about AI, which is that we can have, if we have these questions and we get our answer, say that you are learning a new topic and you have, if you're reading your book, or if you're going through, say, for example, if you're going through this course, or if you're going through this financial model and you're reading through it, and as you're reading, as you're learning, you have a question, then you can go ask AI. Then you can get your answer from there. However, I definitely cannot replace a human because, and what I say is that there is no progression of thought. Like he said, there's no inherent creativity there. Where if I'm talking, either my friend, or if I'm talking to one of my professors, or my boss, or my coworker, or something like that, we will have a conversation and we'll go back and forth. Same way how in a chat bot or in a AI, you'll have the conversation back and forth. But with a chat bot or with an AI, you'll have question and then you'll get an answer. And you'll get a question and you'll get an answer. And it's just that back and forth. And whatever your question is, you answer it. But if you are having a conversation with your peer or someone else, some human, is you have your life and you have your own experiences which shape your perspective and shape your opinions on things. And the way you have your whole life and your whole unique story, your other person you're talking to, this other human, they have a completely different life. And they have a completely different story and different opinions and different insights that they'll be able to also provide. So you can share, if you have a question, they can answer it, but they also give more context. Say, in my experience, this is what happened and this is what I learned from it, and you learn from each other and you share these ideas and you come up with new ideas. Say you're having a conversation and you're talking about what something happened in the past of your experience, then you're able to share that, but actually in that conversation you're creating a new experience. Say that in another time you're talking to a different person about the same topic and they're having the conversation. Then you can actually bring up, hey, I had this one experience where I was having this conversation, and this is what I learned from this entirely different person. So, because of that, you have this progression of thought like this, and it's just growing your knowledge more and more. But AI, it's just back and forth like this. There's no growth that happens. That was all I had to say.
Thank you to you. So I think this is uh, so you can, it is a path for you. एंड जस्ट सवाल जवाब है, सवाल जवाब है, सवाल पूछते रहिए और ठीक सवाल पूछिए, आपको ठीक जवाब मिलेगा. सो so coming back here that Sumit asked the hallucination, मतलब कि AI से सवाल पूछते हैं तो खो जाता है वो कहीं पर, right? तो उसीलिए जो AI जो है ना, AI, no matter how much information it may have, how much intelligence it may have, लेकिन उसको ह्यूमन इंटरेक्शन चाहिए. और वहीं उसीलिए कहते हैं चाहे कितना भी AI बढ़ जाए, human का जो role है, our thinking capability, that is always going to stay, because there'll be, otherwise AI will get lost. So somebody should be there to guide the AI in the right direction. So it is absolute. As a matter of fact, one of our speakers who was here last time, that's Dr. Sanjay Mittal, in our last class, in last session actually, he talked about this hallucination, and he's writing. He has an AI company, and he's trying to write a model so that the hallucination जो है ये कम से कम होता जाए. That's what he's trying. So thank you so much. That all those questions are very, very, very good. Okay. Uh, Now, do you do the next part we're going to say is, do you have the students? Do you have on the WhatsApp? Did you uh, get the model, financial model? You should have it. और आप उस फाइनेंशियल मॉडल को you should you should try to fill up with your ideas. So I will ask Ms. Riya, if you can please show that, and maybe you can the model which you have shared with them, how they can fill it. Just if you can just go through that, please. Yeah, you can share.
So if everyone can I follow along, so I made this template instead of going through this and just, sharing this with you and having the whole thing filled out and talking through the whole spreadsheet. I made this so that this side is actually blank. So this is something that we can build together. So I'm hoping that all the students have clicked on the link and open this document or this spreadsheet. And what you can do to make your own is if you click File and you click Make a Copy, like this. So I hope that you can do this, make a copy, and so you'll be able to edit. Of the spreadsheet right now, you don't have the edit access. You just view only, I think. But if you make a copy like this, then it'll open your own version so that you can follow along at the same time. So let's just, before we go through the entire details of the model, let's just look at all of these tabs at the bottom. Okay. All of these tabs. So there are 4 of them. The first one here, if you can see my mouse, yeah. This just the instructions, and it has, in case you get lost, or this is just the step of what you do, and these are some of the numbers that are given. Say if you have a math problem, if you're solving some kind of word problem, then you write down all of your givens. So this tab is basically, this one has all the givens, which we'll put into our formulas and things later. The second tab over here, this one is what has all of our assumptions, which is first, this is split into 2 parts. There's a big line down the middle, but oopsie. Oh no. What's happening? Okay. There's this line down the middle, and on the left side, we have the historical. So this is already what happened in the past. And so we actually mark this by writing A next to it. And on this side, I didn't do this, but we use this and we mark either a P or we do E for expected. But on the left side is just what we have already what we've already seen in this company's financial data in the past. And so this side is where we build it. And then we have this other one. So these are just the assumptions to get us started on the spreadsheet, where this one, this next tab down here, the third tab, This is our actual model. So on the assumptions, it just has these small sections. This is the entire spreadsheet. Then on our three-statement model, it says company A financial model. This has all three statements. So first on this is a big long document or a spreadsheet. So we start off with the income statement, and these are all of the line items that you'll find on a company's income statement. Then if we scroll down a little bit, the next one is the second one. It's the balance sheet. And so you can see the different sections. These are our asset section. This one is our liability section, and this is our equity section. And so if you actually take a look here, where we can make sure that we have our numbers correct is if we do this check. If anybody remembers this equation, I'll type it here. It's kind of small, but assets equals this one, total assets should equal the liabilities plus the equity in this one here. So our check is we make sure that this is the case. We can look over here, we can check on this line. We can say, okay, total assets, and then we have down here total liabilities and equity. We can look if the number is the same, or we can make it a little bit easier. We can just do in row 81, it just says check. So what I've done here in the check is just the assets minus the sum of the liabilities and equity. So the number should just show 0. And if it shows 0, that's how we know we did it correct. And then at the bottom, we have this cash flow statement. And this also has the 3 different sections. It has the cash flow from operating activities. And here we can see things like that we'll recognize, such as like our inventory. That's something that's our operations of the company. And the next one is investing activities section. This is going to be something like our equipment that we're investing. And then the next one is the financing activities. And so these are some terms which we don't need to, we'll just go over, not in detail. These are just going to be part of the financing activities. And what we're ultimately trying to find in our cash flow statement is this beginning and ending cash position. And this is where we find what has been going on in the company, in the business, is where is the cash going? Where is the cash flowing to? And in order to, for this section here, for this financing activities, in order to calculate these, there's another section at the bottom where we have this debt and interest schedule. And so this is a little quite technical, but it's not too complicated. If we have time, we can go into this. But this is just, we're talking about, this class is for entrepreneurship. And in entrepreneurship, it's part of the, if you're having a business, if you're having these ideas and you want to be selling something, you want to be making money, you want to be catering to your customer, and that's what entrepreneurship is about. However, on the other side, if you are running a business, these are just the technical things that it's helpful to know. These are 2 different things. The business and selling things that's one part of it, is creating ideas and, using design thinking and changing your product, and the feedback, what I was talking about earlier in the introduction, is more about, the entrepreneurship side. And this is the other side. This is the finance side, where we can just go into this if you might be interested. If this interests you, if you think this might be something you might want to go into, this will be just an overview. So if you take another business class, or so if you take another finance class, then in the future, this is something you can, it'll look familiar because um, any one of these financial statements, it actually looks just like this. If you look up, think of any company, any publicly traded company that you can think of, it'll show like we can say Apple, for example. You know, Apple company, iPhones and MacBooks. If you look up, you can find their you can look up their financial statements, and it's gonna look just like this. This is the language of finance is this accountancy. So this is our model, and in order to do this, we have to build it first here. And then in this fourth tab down here, formulas and definitions, is I've just written out all the different formulas that we'll be covering here. I might go a little fast. You can let me know if you want me to slow down a little bit, but in case you forget, or in case you don't hear me, or you didn't understand what I said, or if I go by too fast, then it's all here. You know, in the income statement, these are the three financial statements. So in the first one, these are all the items that we're gonna find, and here the formulas are right next to it if you get lost. So, before we get started on this part is the actual three-statement model, is we have to go to our assumptions. And we have to look here, and we have all of this historical data here. But we need to find out, we're projecting something on here. We're making, because this is now, at this point, it's in the past, but we're saying pretend that now it's 2025, and we're trying to project this out for the next 5 years. You don't have the numbers there to get from anywhere, so you're making a guess, basically. That's what all the companies, all the businesses, this is what they do in order for the investors to decide, do I want to give this money, this company, do I want to give my money to this company or not? And how do they decide that if they don't know, if they're not part of the business, if they don't know how it's going? What's the quickest way that the investor can understand how is the company doing? Is it a good idea or is it a bad idea to give this company my money? And the easiest way to do that is to look at these statements, these financial statements, because an investor will know this entire sheet and how it should look like for this company. Every company will be different, and especially in each industry, it will look very different. Well, but it will they will have a sense, and they'll know based on you can look through all of the numbers on the spreadsheet, and they will be able to tell, is this a good idea or a bad idea? So what they would do is look at the historical, because that is what they publish on the internet, to the public, that they release these information if it's a for that like these publicly traded companies. And so the investors on their side is they have to do this part, which is project what do they think is going to happen, or even on the business's side, if they should change their strategy within their company. If you're the CEO or something, you or the CFO, you want to know is where do I predict that this is going to go? So you do that, you go on the assumptions. And so we are going to build this out on this side. On the instructions tab at the bottom, it'll say, you might be wondering, where do we even get these numbers from? This entire thing is blank. There's nothing here. So where are we going to get these numbers from? And so this is where the tab on this side, it will tell us. So over here on the income statement, this is what we're gonna look at. We're gonna start on this side, look income statement, and this is the balance sheet, and down there. So we're gonna start here, income statement. So we look at the same one on this one. So income statement. The first one, it says revenue. It says assume 5% growth rate in each year of the forecast period. So 5%. So then let's see, what does this say? Revenue growth rate. So same thing here, revenue growth rate. We're going to put 5%. And it's going to show blue because when we're doing these financial statements, usually, just to make it easier, usually if it's projected, it's a different font. It'll be italicized. It'll be in italics. But just so it's very clear, I'm making it blue so we know that this is an assumption. These are just projections that we're thinking about. And so it says 5% growth rate in each year. So what we can do, if you know this Excel, we can take this here. You can use Excel or you can use Google Sheets for this. But we take this and we drag it, boom. All 5 years, they have the same 5%. And then if hopefully you're following along on your version of the spreadsheet. Actually, before we get too far into this model, I want to do something. This is very, very important. If you're doing, whether you're using Excel or if you're using Google Sheets, this one right here is very, very important. So if you just made a copy, then you're going to use the Google Sheets instructions, or if you actually downloaded this as an Excel sheet and you're doing this on Excel, then you want to follow these instructions. But this is because there will be some circular references. What that means is in one of our, over here, we're going to have something that says in our formula, and we're going to calculate, and we're going to put in the formula into our cell, and it's going to reference something down below. But that number is also referencing something up above it. So it's basically a circle of references. It's why it's called a circular reference. And so our Excel or our spreadsheet, it can calculate that, but we just have to tell it that, hey, this is going to happen and we need to calculate it. Usually they don't need it if you're just making a regular spreadsheet, if you're just doing something else with your spreadsheet, then it's okay, you don't need to do this. But because we're doing this financial model, it will have a circular reference. So what we want to do here is follow these instructions. So here, if you're doing this on Google Sheets, you go up here. Hopefully you can see my mouse. It goes File, Settings down here. And this is general. You go over to the calculation side. And there's this toggle here. And it'll show automatically, it'll show off. But you want to make sure that this one is on. Maybe if you did a copy of this sheet, it might be on already, but if it's not, I just want to make sure that this one is on. And also, you want to change this one, it should say 50. I want you to change it to 500 and save settings. So this will just make sure that it'll do all of our calculations correctly. All right, so the next one, if you're following along, this one, it says COGS as a percent of revenue. It says it right there what we're supposed to calculate. It's saying that it's a percentage of revenue. COGS, if anyone knows COGS, that just stands for costs of goods sold. So instructions, let's see, COGS as a percent of sales, assume 40%. Perfect. Assume 40%. We're going to put 40%. Awesome. And we're going to drag this out here. What does our next one say? Depreciation as a percentage of gross PP&E. PP&E is property, plant, and equipment. And so this are things like, yeah, the equipment that you're using to produce your good, or it's talking about the actual land that you're doing this, that you're manufacturing on. And so all these materials, all of these machinery, they're going to depreciate. They're going to lose value over time. Say that for an example, this would be if you buy this machine that will help you manufacture your product. And you think that, okay, this will last me 10 years. For 10 years, they will it will be, building this product or something like that. But over those 10 years, think of it that the equipment is going to wear down. In year 6, it's not going to perform the same as it will if you just bought it, right? So you can think of it like that's what we're doing here with this depreciation. It's going to lose value over time. So depreciation, and we go to the instructions, it says it right here, assume 2%. 2%, and we just drag it across. Amortization, let's see. It says enter 0 for each year. This is very straightforward. It says it in the instructions already. So it's very simple. See, finance is it can be quite tricky, but where that happens, where it's tricky, is on this tab. Is in this model, it gets a little confusing. Right now, we're doing the easy part, which is just making sure we have all of our numbers, because on this side, it doesn't say for each year. It just says what the number is going to be, or what you can think that the number is going to be. In this one, because of our model is going year by year by year, we want the number for the year, each year after year. So we have that in our assumptions tab. That's why we build this first, and then we can start working on our model. So in this one, SGA as a percentage of sales, assume 30%. Other income or expense, assume 0. Tax rate. Tax rate, assume 30% for each year. All right. And here, dividend payout ratio. This is something there are no dividends here, but dividends are one of those things that, you pay off to people. This is in our, from our, net. This is where I talked about in this slide, where you can start up here and your revenue is going to be a big, big number, but you have to pay certain people down the line, and then it becomes a small number at the end. And so our dividend payouts that's one of those items that we have to subtract after. There we go. The Zoom thing is in the way. Okay. So we'll just put that as 0. Cool. So usually we would go through this whole thing, and first you want to do all of these assumptions first, and you want to fill out this entire spreadsheet first. But just in the interest of time, I think right for today, we can only build our income statement. And if we're done with our income statement, then we can move on and we can come back to our balance sheet. But first, let's take, this is all the information that we came together for our income statement, and we have all of this information. So now, before, the only thing that we had to work with was all of this data from here, which is what happened in the past. That's the historical data. But on this side, we don't need that because we already have it, right? We don't need to just write down the same information. What our value is going to be here is doing projections in the future. So that's what we have everything in blue. And so the blue is going to help us in our calculations for this model here. So this is our income statement from row 6 down to row 42 or 45. Like we have our dividends, but we said we're not doing anything there. So let's go here. So each of these line items, here it says revenue and it says cost of goods sold, also called COGS, and gross profit and things like that. And under each of them, it has percent growth or it has some kind of percentage. If it says margin, it just means that it's taking that and dividing it by the revenue. It's all of these margin percent. If it says margin, it just means that I want to know this number. You could have this $92. But $92, what does that mean? It doesn't mean anything if you're just, giving someone this number, $92. There's no reference. There's nothing to compare it to. So why we need this percentage is we're comparing it. How much is this compared to our revenue? How much of our revenue is coming instead of just being a random number? So here, we actually have it down here. Percent growth. If we remember from our assumptions tab here, revenue growth rate. And it's over here, this line item right here. So it says over here, instead of just calculating our revenue, what we can do is this. So we can do equals, and this is 2025. So we make sure that we're also doing 2025. And I'm going to click up here. That's like in the way, but hopefully you're able to see. This is our growth rate, and we can stretch it out here. And you know what the good part is? So this cell, we can see on our reference here, assumptions, it's referencing this one cell here. However, if we take this and we drag it out the entire other 4 years, this one is not referencing this cell. It's actually referencing this one now. So that's very helpful for when we're doing modeling like this, is it does the entire, it goes each year. And there's a something you can do to make sure that, hey, I want it to always reference this cell. But unless you say it specifically, it'll do each year. So that's exactly what we wanted. So revenue, so this is our growth rate. So 5%. So we can't just say the previous year times 5%. We have to do 1 plus 5% because that's how much it's growing. So our formula for this one, we're going to say, okay, this is growing. So where do we take this number from? It's growing from the previous year. So we go back and we say this $200 times, and times is the star, and we do 1 plus this growth rate down here. And we close our parentheses, and there it is. And so we can take this and we can drag it out. Boom. And do we see how it's a different number every time? Because this one, if we take this one, if you double click, you can see this one is referencing, this is the previous year, and here's our growth rate. If you look at this one, 2028, it's going back to, this is the previous year. It's not going all the way back to 2024. It's just going back to 27. And there it's using our growth rate down below. So there we have our revenue. So now our next item here is our costs of goods sold. So let's jump back and let's see, what did it give us for our cost of goods sold? It says COGS as a percentage of revenue. So this one also says as a percent of revenue. So we go like this, we click equals sign, and we go back here as a percent of revenue, and we go back, make sure we're clicking on our 2025, and click enter, and we drag it out. So then over here, we write our equal sign, and it's a percentage of revenue. So we go like this, we take, where's our revenue? Our revenue is right up here. We just calculated that. So we go like this, and we multiply it by right below our percentage of revenue, $84. And we take that and we drag it out again. All right, and gross profit. This is our first actual calculation. All of these ones, this revenue one and this cost of goods sold, they were just taken from here. It actually told us right here, as a percentage of revenue, it told us exactly what we're doing with it. This is our first, gross profit is our first one where we have to know the formula for it. Is how do we calculate gross profit? And I actually, this would be our revenue minus our cost of goods sold. And if you forget that, I actually wrote it down in this formula's here. If we scroll back up, gross profit, revenue minus COGS. And instead of just knowing the formula, it has to make sense to us, right? Gross profit. And what does that mean to us? Why are we calculating this gross profit? It's because we're taking this revenue. Revenue is the number of sales times the price of what we're selling. So this $210, this is all of the money. It's actually in millions. If you can see at the top here, it's in millions, but we're just going to say 210. This 210 here, it's all the money that we made just from selling our product. Our this whatever goods and services. We selling it. But in order to have that product, there was some kind of cost. And that here is our cost of goods sold. So in order to get to our gross profit, we have to subtract that from our revenue. So what we do here is our revenue minus our COGS. And there it is. And we extend that out. And you can see if you want to check what happened, you can double click on the next one. You can see it took from 2027, or over here it took from 2029. And what we said about this one, gross profit margin percent, it's just saying, okay, compared to revenue, how much was this? So we can go equal sign, this divided by, so our gross profit divided by, divided by our revenue, and that's what gives us our margin, and it calculates us. The same thing that I said about this $92 here, this $126. If you just told me that, oh, our gross profit was $126, I would say, okay, great. What does that mean? What does that number mean? It's not coming from anyone anywhere. It doesn't mean anything. But if you say our margin percentage, our margin is 60%, that's telling me that it's that percentage of the revenue. And we'll do that more down here. You know, if we have our SG&A, our selling, general, and administrative, or here, or anything down that calculates this, like our net income, this is going to be important. This is called our income statement. So ultimately, what we're trying to find out at the end is what is our net income? And so we'll find that at the very end, these are all the things that we have to add or subtract. And at the end, it's going to give us net income. And so we're going to ask for two things that'll help us. So you can see how it says this amount of money. It says these numbers, 20, 23, whatever. Same thing. Those numbers on its own, it doesn't mean anything. It's not helpful to us. But what does help us is, okay, compared to our revenue, what percentage is our net income? How much money are we actually able to put in our pockets at the end of the day? After we pay all these people, after we pay off everything that we need to, is what percentage is that from our revenue? And so this is the number that we want to be finding. And same thing for down below. if we're looking, so this is just general, okay, what percentage of our revenue is it? Then down below, we're looking for our growth. This is important if you're looking at the trajectory of how the company is doing. If it's doing well or if it's doing poorly, we want to know just general direction is where is this company going? So if we say our growth rate is here, okay, 1%, not that great, but if it's growing, okay, 13% or 15%, 16%, that's growing in a good direction. If it drops down 9.2%, it's still growing. But if we see our number for our net income growth, specifically this growth rate, if that's negative, then we know that that's making less money than before. Even if, in this year, in 2023, it was almost 16%, this net income growth. It was growing by almost 16%. And the next year, it's a little over 9%. That number is way less. It's almost 7% lower, but it's it's still growing at a certain rate. But if we said over here this was negative 9%, then we know, oh no, we're losing money as a company. So that's where these numbers, these two, our net margin and our net income growth, they're actually more helpful than just this net income number over here. See, we want to know comparatively, relatively, what do these numbers mean? Because there are so many different industries. You can have, say, a tech company, or you can be talking about retail, or you can be talking about grocery, or you could be talking about automotive, like cars, or you could be talking about insurance, or any one of these industries. They are so, so different that if you have a number like 150 in one industry, that number could mean a good thing, and another industry it could mean a bad thing. Same thing for different companies. For if you have in, say, a tech company, if your number somewhere says, say your number in your net income, if it says something like $200 within even the same industry, for Apple, that could mean something very different from Microsoft, for example. It's all relative. So what you want to know is these percentages are the most helpful. Then we're going down to our depreciation and our amortization. These are two items here. And it says here, depreciation as a percentage of gross PP&E. So PP&E we said was our property, plant, and equipment. And so this is one of those things why we went to this setting over here and we changed it, because this will later turn into a circular reference. What we can see here is gross PP&E is not an item on our income statement. I told you we're only working on this income statement right now. But then you can look through all of these items and gross PP&E is not there. It's actually, if you scroll down to your balance sheet, gross PP&E is right here. So it's on a completely different statement, and we're not working on that yet. So what we can do is just, it'll be a placeholder. For now, it's going to show as 0. For later, when we do our balance sheet and we fill out our whole balance sheet, then that number will become populated with the correct one. But for now, we're just going to link it to the cell. That'll be 0 for now. So depreciation, we'll do that equal to what it said on this one was a percentage. So depreciation as a percentage of gross P&E. So we take this, we take our 2%, and we click times, and we go back to our model, and we scroll all the way down to our balance sheet, and our gross PP&E is right here. And we click enter. So over here, it's showing 0. Because sure, we took this 2%, but it's taking 2% of right now. This number is 0. See what happens to to our depreciation, say if I put this number as 50, just for example, if we say that let's make it more similar. This one is 323. Let's say that this number is 330, for example. Then if we scroll up, there we go. Our number here is now different. So right now, we're gonna wait until we calculate this in our balance sheet, but we're just gonna leave this for now. So it'll calculate it on its own later. So we take that and we drag it out. Amortization, what we said in our instructions, it said amortization we said was $0. So we can link that equals our assumptions tab, $0, enter. There we go. So our next one over here is SG&A expenses. First, let's see, down below it says SG&A as a percentage of revenue. So let's check our assumptions. SG&A of sales. Same thing. This is the same thing where they have different words, but they mean the same thing. Our revenue is the same thing as sales. Because our sales, what we're talking about, is the number of sales times the price of our product. And so that's what when we say sales, we're talking about that, which is the same thing as our revenue. So SG&A as a percentage of sales. What we can do is actually, we'll take this one down here, we'll link to our assumptions tab, SG&A as a percentage of sales. So this is 30%, and we can drag that across. So now we can say, okay, SG&A expenses, we say that it's this percentage of revenue. So we do revenue times this 30%, and we drag that across. Then our next one is our operating income. What our operating income, there's another term for it. It's called EBIT. It's called earnings before interest and taxes. So here we can see interest expense is down here and taxes is down here. So what our EBIT is these earnings before we subtract those out. It's called our operating income because our interest and our taxes are those things where they're not about the company. Like here, if we're talking about our costs of goods sold, that was actually about the business where we are selling these goods and these and this is something that we have to subtract is the actual cost of them. And that's what's helping our actual operations of the company. Now, what's not part of the operations of the company are things like interest, are things like taxes. Our taxes aren't going to help the company. It's not doing anything for our company or our business or our equipment. It's not helping us sell. It's not doing any of that. So we calculate that afterwards. So what we have here is our operating income. And so let's see. Actually, we have our formulas here. So in this one over here, how to calculate our EBIT, our operating income, is we take gross profit, we do minus depreciation, minus amortization, and minus our SG&A expense. And I think I mentioned our SG&A expense is selling, general, and administrative expenses. So that's another thing that's helping with the operations of our company. So what we take here is our gross profit. It already this Google Sheets, it's already helping me out. It's already saying exactly what to do, but instead of doing the shortcut, let's figure out how to do it on our own. So we take our gross profit minus our depreciation, which this number is 0 right now. It'll turn to a different number later. Then we minus our amortization, and then we minus our expenses here. And so we get $63. We drag that out. And then our next line item, it's saying the percentage. So the same thing as what we did up here is with our margin. We're doing the same thing where we want to take this number, compare it to our revenue. This is the same thing, $63. What does that mean? Sure, we have 63 million to operate with. Okay, so what? We want to know compared to our revenue, how much is that? So we take this, we take our $63 and we divide that by our revenue up top. And good, we have 30% and we drag that all the way out. Nice. Does that actually? Okay. Okay. Yeah. Okay, that works. So then next what we're doing here is our EBITDA. So this is the same thing. EBIT was earnings before interest and taxes. This one is the same thing, except now we're including our depreciation and amortization. If you remember here, we subtracted those two from here. And in order to find EBITDA, we have to add them back in order to understand that number. These tell us two different things. Our EBIT, our operating income here, this tells us some information, and it's including the money that we subtracted from our depreciation and from our amortization. But in EBITDA, we have to add that back. And so it's going to be the same thing. And I wrote that in here, I think. Yeah. We take this. So do you see how here you can calculate it in two different ways? Because our EBIT, our operating income, we did gross profit minus depreciation minus amortization minus SG&A expenses. So what we could do for EBITDA is take our operating income and we can add them back. Or another way that we can calculate this is just saying our gross profit minus SG&A expense. It's the same thing. Do we see here? Because here are minus depreciation minus amortization, and here we're just adding the same two numbers back. So you can do it either way. It's going to give you the same number. Since we already calculated EBIT up above, I'm just going to use that number. So we do our EBIT, and we do plus depreciation plus amortization is going to give us the same number right now. But like I said here, I'll highlight this in a different, I like to, when I know that something is going to change, I know I'll have to go back to it and it's going to look a little different later. And just to double check, I'm going to highlight it in a different color just to know, okay, this is not, this will be different later. So I just highlight that. And then we drag this across. And then here is our margin percent. So same thing, what we want to do is we take this number and we divide it by our revenue. 30%. It should be the same number since we see these same numbers across. Yeah. And then EBITDA growth. We want to calculate how much is this growing year after year. So in order to calculate growth rate, our formula for that, I didn't write this down, but I should write this in the notes, is you take this year minus the previous year, and you take that divided by the prior year. And that's how you calculate how much something has grown. So I'll show you the formula here. I'll type it out. So you take this year, and we open parentheses, make sure that we have our order of operations. So this year minus last year, oopsie, minus last year, and we close our parentheses. and we take that and we divide it by the last year. So it's going to show how much that this number has grown. And for here, it's 5%. And so we drag that across. Right now, it's going to show all 5%. As soon as this number here, we'll do the same thing. Let me go down to gross PP&E. If we say that this number was 330, yeah, we'll say, uh, I'm just putting in random numbers. You don't do this. I'm just, okay, say that we had these random numbers. I'll delete this in a moment. If we go back here, then we see our numbers are different. Our depreciation now, this has numbers filled in. And now our SG&A expenses are the same, but now our operating income, because we had to subtract that depreciation, and then over here we had to add it back. So that's why this looks like this, and you can see that once we have our balance sheet filled out down below, then all these changes will happen up top. But for now, we can delete this. It's just to demonstrate because it might be confusing. You can look at the spreadsheet and say, hey, aren't these all the same numbers? It's just the same numbers over and over again, but they're not actually the same because it matters not what the numbers are that's showing in the cell, but it matters what is the formula, is how are we calculating each of these? What is the number representing behind it? And so we have just a couple minutes left. This will be perfect. Let's finish up the income statement. We can do this. So interest expense. Let's hop back to our assumptions tab. Or actually, interest expense. This is interest expense and interest income are something that we're actually going to have to look way back down when we do our third statement, the cash flow statement. So you can probably see in this slide. Yeah, it says it right here. Over here, we say income tax expense or interest expense. Here we go. And this number is actually coming from our different statement. But for now, what we can do, interest expense, we'll put equals sign, and we have to scroll all the way back down to total interest expense. And we'll set that. And same for interest income, equals sign, and it's going to show blank for now. But interest income, scroll all the way down. It's called interest earned on cash. They're called different things, but it's the same concept. You link it down here. And so these, do you see how, let's look up top over here in there's a certain name for this. I'm forgetting what it's called, but if you understand Excel, if you know these different Excel spreadsheet terms, then this is one of them. It's very helpful to understand. If I click on any other cell, there's nothing up here, but actually in these two cells, we just linked them. So it actually shows the formula. So we want to take these, select them both, and drag them all the way out. And there's nothing in the cell, there's nothing that shows, but the formulas are all there. And so because of that, I just want to come here and change it. It just tells me that this is going to be filled out later. And net interest expense is, net interest expense is going to be our expense minus our income. And it says that down here. Because we're calculating expense, so that's something we want to subtract. And so right now there's nothing there, it shows $0. Other income or expense. This says this in the assumptions. 12, it says $0 for each of them. So let's link that equals, we'll go back to our assumptions tab. This one, other income or expense, yep. And we drag that out. Then our next one, pre-tax income. So our pre-tax income is going to be our operating income minus our net interest expense and minus our other income. I have this formula here. Or sorry, plus our other income. So, is this one? Because this one, our EBITDA, we added back our depreciation and amortization. This is helpful. This number, our EBITDA, is helpful, but not in this calculation. That's why there's a small box around it. I don't know if you can see these. There's a line around it. It's just containing it that's not exactly what what we want to use for our calculations right now. So our pre-tax income, we're saying, is our operating income minus our net interest expense and plus our other income. And we click enter. And we drag that all the way out. And our taxes. So instead of just calculating our taxes, we want to start here. Our tax rate, it says that on our assumptions tab right here. So we say our tax rate is 30%. And we drag that out. And so we take this, in order to calculate that, we take not all the way up in our revenue, we have to take it from what we just calculated. So we take our pre-tax income times our 30% is our taxes. And so we drag that out. And then our net income here is going to be our pre-tax income minus our taxes. So pre-tax just means before taxes, and then we subtract them. And so after that'll be our net income, that'll be minus our taxes. So pre-tax minus taxes. And we go like this, and we drag it out. And so our net income margin is going to be our net income divided by our revenue. We always want to say, what is this compared to our sales, our revenue? This is not a percentage. There we go. And we drag this one out. And then we want to know our net income growth. So we do the same formula as we did if we want to know how much the growth rate was. So we do open parentheses, this year minus last year's, and we close our parentheses and we divide it by last year. That didn't look right. Okay, yeah. Yeah, we can see there's a big jump in here. And this will be fixed when the numbers right now, you can try to look at the numbers and you can tell if there's a big difference where there shouldn't be a difference. Like this one, it goes 16%, 9.2, and it jumps all the way to nearly 50%. And that makes you think, oh, that's weird. Why did that happen? And it's because there are numbers here that's going to affect what happens. So like over here, because we didn't have any interest expense or interest income, even though there will definitely be interest expense. And then here, there's no depreciation, which will have the depreciation once we calculate. And then dividends, we calculated, or no, we didn't calculate, but it says in our instructions is that, our assumptions, it says we're not having any dividends. It says it somewhere here. But we can just mark that as 0. And we drag that across. And that was, if you are following along, you just built your first income statement. Hopefully that all made sense if I wasn't going too fast. But this is what an income statement looks like. And so we started with a completely blank spreadsheet and we just filled out this entire side right here, all of our projections right here. And um, we still have two more statements to go. We have our entire balance sheet here and we have our entire cash flow. But this was our income statement for now.
Riya, I want to thank you so much. You have gone through this, and I think you have given the students all the way from beginning to the end, and now they are fully equipped to actually do their own modeling. They can do that. You have shown it in a very, very clear path. So thank you so much. And I truly, from on behalf of Jharkhand University, on behalf of Palamu Engineering College, BIT Sindri, we really thank your effort. And now I turn back to the students. If you have any question, you can ask Riya, and I will also have I will request Professor Suresh Roy uh, to to give his comments, please. Professor Suresh Roy.
Excellent, excellent, Riya. Thank you so much. And although you have specialized in this, but as far as entrepreneurship is concerned, what is more important at the starting point, a product or a balance sheet?
Well, the simple answer is at the very beginning, it's definitely the product and the idea because you don't have any money in the beginning. So you don't have a balance sheet to begin with. But conceptually, and the heart of the question is that it really does matter what your product is and the way that you go about your strategy and how you want to sell it and who you're selling your product to. That is the most important because if you decide to sell to a certain group and that's the wrong people to sell you, you're also not going to make any money. You're not going to have your balance, not going to have any money. In fact, you're going to have losses on your financial statements if you don't have the right business model.
Business model is developed after a product is known, after you do all the marketing. Only then it will translate into checks and balances. That what you have done here is, first of all, it's very important to have a product. Go and talk to the customers, find out what really interests you. Until unless you're not really into entrepreneurship, because that is a long hours that you have to put in. Please don't underestimate. You might have to put in 18 to 20 hours per day. Until unless you don't have that urge to do it, until unless you don't have that energy to do it, the chances are you're not going to be an entrepreneur. So all that is once you know everything, what you have to do, how you're going to do your product, you've talked to the customers, and you've formed a company, then starts your balance sheet that really comes in, where you have to really go to an investor at this point and say, this is my company, this is our forecast, and this is how much money we'll make after 3 years, 4 years there, because that is very important. But at the same time, it's very important, no matter, even if they join an existing company, each one of you has to be responsible for the financing of your department, because your department is allocated certain amount of money that you can spend. And that is why at the end of the year, they always come back and say, what are the capital expenses that your department is going to buy? And then you have to justify buying of those capital equipments, because money does not come that easily. But a spreadsheet like this, which will very well explain where the money will come from, how much of this is going to be valuable to the company, and how much return of our investment is there. Normally, whenever we buy a capital equipment, it is expected that within 2 years, we should have return of our investment, 2 years or sometimes in 1 year. Because most of those equipment, although Riya said 2% depreciation, I think it's very easily 20 to 30% depreciation that goes into this equipment, because a machine will not last for 50 years. It will last for 5 years, 6 years, and then you have to replace it because now you require more enhanced machines to come in and replace the old ones. So students, please take this very seriously, because this is going to help you when you join a company, or suppose in the interview they give you a spreadsheet and say, can you read this spreadsheet for them? And if you know about it, you're going to see exactly how things are done. Remember that movie, if you remember that movie Golmaal, in which the hero was given a spreadsheet to read and he says, किस डफर ने ये spreadsheet बनाई है? तो वैसे ही आपको, remember, you have to be jack of all the trades. You cannot say, I'm mechanical, I do not know about this. The more that you know, the better that it is. तो एक एक चीज जो हम लोग पढ़ाते हैं यहाँ पर has its own application when you join an industry. And that is how we want to translate this into exactly what you'll be doing for the rest of your life. If you understand the spreadsheet, you'll be able to read it. And in case one day you become a financer, you will recognize which company to finance and which company not to finance. Thank you.
Very, very well said. And then for those students, those who want to become entrepreneur, before they join the company, before they go for the interview in a company, go and look at their financial statement, because all those are public knowledge. All the public companies, those are the public knowledge. And you can find out from those reports what problem they are facing, which area they're facing the problem. And when you go in there for interview and you refer to those things that you have seen the annual report of this company, and I see that you are doing very well in this area, but in this area not doing very well. That, just imagine when you go back with that kind of information during your interview, the person who is taking the interview says, my God, you have done your homework. And so that's how. Anyway, thank you so much. Any questions, students? If you have, we want to wrap it up within next 2 minutes. So just one more question we will take, and then we will close it. Riya, you have done an excellent job. Thank you so much. Okay. All right. Professor Suresh Roy, thank you so much. And Professor and all the other students, thank you. And it was a very productive meeting. Yeah, I really want to commend you, because you took us all the way from blank sheet to explaining all the intricacies of all the financial planning, the financial terms. And so thank you very much. And we look forward to having you again sometime whenever you have time. We would love to hear from you. Okay. Thank you.
Riya, very well done. So glad that you came and talked to our students, and I'm sure they will learn a lot from what you have told them.
Thank you. Thank you so much for having me. Oh, somebody said that their midterm was good.
I'm glad that you were able to get that very well. Thank you. Okay. Thank you, and have a wonderful day today, a wonderful Saturday. Enjoy yourself. And here in California, it's 11 o'clock, 11:15 p.m. So, we are just ready to go out. So good luck to all of you. Looking forward to seeing you. All right. Thank you.